Yeah, that's not true. I've been asked that question so many times. My brother, like friends, everybody, and that's not, I don't know where that comes from. I have so many clients too, they're like, no, Donald, I don't want to file on time because I know if I file an extension, I have less risk of being audited. I'm like, if you do it right, you have less risk of being audited. But yeah, I don't know where that rumor comes from. It's not validated. Let me see if I have one more here. So I think this is the last slide. So your benefits are you have a lower tax liability. You're taking back from the government. You can pull up the IRS building and boo them if you want, but you're just taking less money. You're taking money back from the government and having services done for you. You get to focus on your business. It reduces your IRS audit risk. It cleans up your files. It separates you personally from your business. And I'll tell you right now, those, especially in this business, those who know how to separate themselves from the business and treat it like two separate actions are the most successful. Those who always feel like they're working and they're never able to separate themselves from it, whether you are or you aren't, it's a mental, it's compartmentalizing it. If you can't separate that, then you're in trouble. I'll give you a quick example. So in a couple audits that I used to do, I had this guy who came in, he goes, well, my wife's part of the business, and so we have breakfast every morning, and we eat lunch together and dinner together. So every meal we have, we're talking about the business and how to grow it. And so I write off all my meals, I write off our clothes, because even when we're shopping together, we're talking about it, and there's potential for picking up clients and all this and that. And I was like, well, how does your wife feel like every time you guys go out on a date, this is a business dinner? Does she ever feel like you guys are actually going out? Or, well, no, I mean, we hold hands and stuff. And so I just thought, man, what would that be like? And so from then on, I started telling people, look, for your own benefit, separate that in your mind and then start separating the bank accounts. You want your bank accounts separate. That's required by the IRS. If you're not doing that, start doing that now. Once you get an S Corp, that'll automatically take care of itself. It cleans up your records. So things start to separate themselves automatically. Adding additional steps can be harder for those that haven't done it in the past, but if you do it right from the beginning or have someone doing that for you, man, it makes it stress-free, so then it's easier for you to do what you want to do and do it best. Yeah?
I don't know if you said this already, but I know there's an initial cost to becoming an LLC.
Mm-hmm.
Is there similar or
Good question. So there's a one-time, with us, what we charge, and you have other legal firms that will charge you about $1,500 or so, depending. And you could set it up on your own, really. The hard part is people will come set it up on their own and then come to us and say, hey, I've got this S Corp, and they never filed the election with the IRS. They didn't complete all the steps, and so then they pay the same fee regardless. So we have a one-time fee. Caleb has all these setup forms. We have a one-time fee of $600, and then $70 is what the state charges for the registration. What we're doing tonight even is if someone were to come to us and say, hey, I think I need to set up an S Corp. Caleb has our setup forms. We'll charge half price. So we'll give you a discount of $300, and it'd be $370 setup fee for anyone who's doing that tonight. That would get you set up and going. If you know you're at that 30,000 and above point, then I would say absolutely do that. Yeah. Anywhere. Yeah. We cover all the states. I've been doing taxes for 19 years. Yeah.
When you say 30,000, are you talking adjusted gross?
I'm talking after expenses. So your net business amount is 30,000. From that and above, that's kind of your break-even point. That and above is where you're starting to really put money back in your own pocket. We talked about the lifestyle expenses, and then there's some contact information there. Yeah.
You mentioned it briefly, but can you talk
other entities set up? You just go set up a separate personal account, but you dedicate it as your business account. The idea is to have a debit card or a credit card that's exclusively used for that business, and you don't commingle funds. If you were ever audited and they looked and they saw one fund or one item that was a personal expense on your business or vice versa, they would want to run an audit on everything. They would open up the whole gamut. Yeah?
Does it have to be in the business name?
He's asking if it has to be in the business name. If you have no business name set up and it's just you with no entity, no. You could just have two separate personal accounts, but one dedicated. If you do, then the bank's going to require to see your articles of incorporation and other things and your federal ID number.
But does the bank account have to be in the corporation's name, or can it be a personal account that you've had for?
It doesn't have to be, but it should. They expect it to at that point. If you have an entity set up and your business stuff's not being run through that, then they would consider that a commingling. It just confuses the auditor because it's so clear cut to them.
So if you started out, you have your two separate accounts, so let's say you have a
Yeah.
temporary account and a personal.
So you have a personal account and then one dedicated.
Somebody comes in later, sets up an LLC, and then turns it into an S corp, but it's still that same just personal account. Do you have to go in and change
Yeah.
it to a business?
So once, yeah. So if you start off this way where you have two personal accounts, one dedicated, once you set up the LLC, you'd have to go to the bank. The bank's going to want to see that, and then they just change it. They take the same account. I don't know if they change the account number, but they'll take it and now make it an S corp account. What they do is they go online to the state registration site, wherever state it is, and they verify that that's a legal entity that's been set up with the forms you're giving them, and they match it up, and then your account's ready to go. Yeah. It depends on the state you're in. In California, they can go back over 20 years. Yeah. I won't go into that. But 3 years is still your typical. If they determine there's been some type of fraud, they can go back 6 years. So, yeah. If you have an LLC switching to S corp, do you have to get a new EIN? Typically, yes. You'll be assigned one by the IRS. You don't have to go get one yourself. They will reassign you one. And I've had many cases where they just leave it the same. If you file the correct election, then they'll leave it the same. In the back there and over here.
For those who have less than the 30,000, can you give some general guidelines of what they should and could be writing off? Or, and specifically, as there are a lot of people debate how much of their loyalty rewards were they could be writing off.
So that one I'll leave. If you want to call us, that would be, we're happy to talk to anyone that wants to know specifically, because there's more to it than that. We'd want to know like some different aspects of where you're coming from, right? Like filing status and everything else. But we'd be happy to answer that if you gave us a call or send us an email too, and we could call you back and say, here's the typical items. We could even send you a sheet. You don't have to be a client, but we'd send you a sheet highlighted with the typical expenses that you'd be writing off. Back here and then over here. Oh, okay. Awesome. Yeah.
I think you answering her question generally would actually cover more people that are in this room right now. Rather than all of us.
Okay. Here. Who's with me? I am. Well, so typical expenses, you have cell phone, gas. It depends on the type of car. And I know someone's going to ask, well, which is better, leasing a vehicle or owning a vehicle? Who asked that question? So depends on the type of vehicle you have. If you have a great mileage vehicle, you're always going to win with taking your mileage. You're going to make money off of that deduction. So you have your car, you have your cell phone, you have internet, you have other things. Like I said, when you get into higher income, then there's some personal items you'd start writing off that you wouldn't have been writing off before. Home office can become an issue at that point. When you have an S corp, it's easier to write off a home office than it is on your personal return. It's tough to do it on your personal return. Shipping, yep. You're going to have any of your costs of goods sold, so your purchases, anything else, supplies. You have a couple of catch-all expenses, which would be outside services. That could be anything. So if you're not sure where to lump it into and doesn't fit into one of those that I've mentioned, you could just name it supplies or outside services. So that would be equipment, and depending on the size of it, and they've changed regulations as far as how much you can depreciate in 1 year, but then you're talking depreciation and it gets into some specificities. Yeah.
Are there any specific things that we need to watch out for that are, what you would deem as flags? There?
So he's asking if there's specific flag items. No, not really. If it's an expense that you had and you deem that as necessary to run the business, then you typically have nothing to worry about. And I say that because there could be some things that would not be a red flag that an IRS auditor could look at. They're used to being an employee working for the big man and not knowing how you run a business, and so they look at it and say, I don't think that's reasonable or necessary. So as long as it's something that you deem that is necessary for running the business and you can show a derivation of income from it, you're good. Yeah.
How do you document what oils you're using for personal and what oils you're using for samples and giveaways?
That's a good question. So that, I mean, you would know that. Documenting it is going to be a little bit different. You'd have to separate it money-wise. So the higher your income goes, the more you just say, hey, look, this is more of just a demo or marketing expense than it is a personal use. Especially if, you know, you're getting more people involved from it, right?
Well, can you not qualify the fact that you have to make an order to get a check, so it's a business expense? Because if you don't make an order, you don't get a check.
Right. The IRS can come in and they can say, hey, look, you've shown after 5 years, you've had no gains on this business. We think it's more of a hobby. Granted, nobody's going to look at this business as a hobby, but there's rules that deem it as one, whether it is or not. You don't really think a hobby would be boating or fishing. But if you don't have a profit on it because you're breaking even and you're going below that every year, then they're going to come in and say, we're disallowing your losses. You can just take it as low as 0 and no further. Let's see. I think right here and then here.
What if you have two different businesses on here? 3 different businesses, and you're using the same printers, the same, stuff like that? How does that?
So she's asking if you have 2 or 3 separate businesses but you're using the same equipment. So just pick one and write it off on that one. I mean, I could say split it a third, and you could go through the tediousness of that, but right here.
In your tax firm, do you do personal and business, or is it?
Yeah, we do personal and business. So that's our, at the IRS, I specialized in small businesses, but started off doing just individual. My dad had this business for 40 years, and so I left the IRS and took over his business in 2005, and then now I've got 2 partners, and we have 5 employees, and we do taxes, accounting, payroll for business, personal. We do audits. We do all sorts of stuff. The only we don't do is like audited financials for big corporations. Back here and then here. Sorry, and I know I'm missing some hands because I'm not looking around very well.
Question, for people that like get a $500 kit or greater, I always give them a free book. Now, how do I write off that book? Is that supposed to be a gift expense, or is that just part of my office expenses? Or
Well, it was part of your marketing or promotional expense to get them to do it, so you just label as promotional or marketing. That's any question I have. Usually, I'll just mark it as promotional and stick it under there. Did you have a question here?
So what's your likelihood of getting audited if you're under the 30,000 and you haven't set up an S corp?
And you do set up an S corp, or you haven't?
Yeah, so let's say you're
Not very high. As long as you're not showing consistent losses, not very high. So it's that's more of a question of your tax savings versus your risk. Right here and then here.
I think I was kind of following the same thing. You're pushing these S corps, but for people that are just starting up their business, it seems like a lot of us have an LLC, or why that was pushed because we're under a certain amount of money starting out, or why
Yeah,
would we be pushed for an
So the reason to have an LLC or an S corp, you'd be thinking would be for liability protection. There is no liability for it. So you're not going to have somebody come to you and say, hey, I used this oil. It's your fault. I'm suing you for it.
Sure.
So it's only for the tax benefit that you'd be setting up the S corp at that level.
Okay.
So really, we're only talking about S corps because of the tax benefit it gives, not for the liability protection. That's a side benefit.
Self-employment tax.
Right, just for the self-employment tax. The liability protection is really a side benefit. It's an additional benefit, but it's not necessary with you guys.
Okay. So even if we're starting small, we should
You don't need an LLC.
go for an S corp right off the bat.
Right. Once you get to 30,000, then go to an S corp. But until then, you don't really need anything.
Okay. Thank you.
Yes.
This is a question that's come up quite a bit lately, and my accountant advised me one way, and I think maybe a lot of other people are making the same mistake. If you go out to dinner with another person, a lunch, with a business associate, and you're discussing business, then you can't count your portion of the receipt. If you bought their lunch, you could count what you paid for their lunch. You cannot count your own. My
Well,
argument
it
is
kinda
I
comes
would
ac-
have been out to lunch in the first place. I would have been home eating a peanut butter and jelly sandwich. I
Yeah.
wouldn't have been at Carrabba's having lunch. But the accountant said, no, the IRS says you're still eating, and so you can't.
So what that is, and I know what he's saying, he's explaining it. Sorry, the question was, if I go out to eat with a business associate or let's say, right? Her accountant's saying you can only write off their portion of it. And I get what he's saying, that's not necessarily true, but it's the same effect. The line that it's deducted on is a 50% deduction. So whether you're writing off your portion or his portion, it really doesn't matter. You're taking the full meal, but the IRS only allows 50% deduction on that line.
But if you didn't buy their dinner, you just bought yours,
You wouldn't be able to deduct it.
then you can't.
The intent is that you're going out with the intent of taking, you're paying for that person or somebody else. You can never write off your own meals unless you're away from home.
Like at a convention.
Right, like at a convention. So, or you're 2 counties away. You have to be 2 or more counties away. You could write off that lunch or wherever because you're not where you could have your home cooked meal.
But you can't write off yours if you took somebody to lunch and they bought theirs and you bought yours.
Right. Yep. So that's part of you sort of courting them. Yeah.
Some of us, I don't know, start out using our own cell phone and internet and computer equipment and stuff like that. So is there a percentage that we take, or is it a yes or no, you're using it or you're not?
It depends on how involved you are. So if you're not working at like a full-time job, then yeah, you'd go for a percentage. If you're working at like a full-time job, then I would take the full amount. The IRS usually looks at it, and when I'm talking about IRS, I'm not trying to create this fear of like, oh, I'm going to get audited if I don't have an S corp. I'm going to audit if I don't do this or don't do that. It's more of if they were to look at it, which is a 1% chance. Then they would want to look at it and say, well, did you take a business use percentage? If you didn't, then they would probably look at other stuff too and say, well, it looks like you were egregious and you took the 100% off of everything, but yet we can see here that you've got 3 kids, you're driving your car here to pick them up from school, and you took 100% use of the vehicle and all these other things. So it's typically you'd want to find a business use percentage because that'd be the true treatment of it. Like I said, once you get to the point you have an S corp, now your corporation can own the vehicle and it's now a business asset, and there's different liberties with writing it off at that point. So it really helps to get to that point and then form your S corp and do that. Because then you can use 100% cell phone. That's normal for an S corp where it wouldn't be normal for a sole proprietor. Let me go over here.
Well, I want to thank you for bringing this because I'm like kind of excited, and for me, part of my vision board will be woohoo, the day where
Nice.
I can S corp. Until that time, so TurboTax, will that do it for me?
Yeah, that's fine. It's designed to work you through and ask you a bunch of those questions. If you're not sure if you're taking advantage of everything, then give us a call. So I found working at the IRS that the amount of money people lost in not writing off deductions would have covered their fees to us and then some. So I'm always partial to me, or any other professional that knows what they're doing. I just know myself and my associates, and I don't know how well other people do it and how experienced they are. But
So still notice someone like you
yes.
even before the S corp stage.
Oh yeah, definitely. Because we'll come up with different ideas and things that we can throw out there that will get you more money back than the cost of having us do it. So I found that through auditing when I was impartial. So, yeah.
On quarterly taxes, April comes around, you predict what you're gonna pay in quarterly taxes for the year. If you have a bad quarter, network marketing, direct sales, does the IRS expect you to pay those 4 payments the same, or one quarter can be less than the other 3?
You would adjust it at that point. Obviously, when you're setting up your estimates for the next year, it's based off the previous year.
Right.
And so if that year changes, then you would want to change that to
Is there a form of,
like a formula.
well, I would say it's like an extension form or some kind of form that you would go with that and you send it in, your ES 1040?
No.
You would just send in the ES 1040 based on what you
Right. you can always scratch out and change the amount based off what you think it should be at that point.
Fine to do that.
Yeah. And I'm not huge on quarterlies unless somebody has a ton of money they're having to pay, because those penalties for not paying it ahead of time are so minimal that you'll do more with that if you're smart with it. Now, a lot of people, my clients are pretty well trained when we're done with them. Some people will come in and I'd say, yeah, pay those right away, because if not, that money's gone and they still owe it at the end of the year.
ERA requires a 100 PV order for us to get paid, and that be written off as a business.
So explain to me what the order is?
100 PV is point value, so the dollar per oil, we'll say it's $100 oil.
Uh-huh. And they require that in order to get paid. Can that be right? You're talking about if you're just using it only for personal. Oh, yeah. You're talking about a cost of the sale, right? Yes, yeah.
No, but you're using the bill personally, but you're required to make that order in order to earn your money.
Commission.
You can't deduct it because it's more how you're using it than whether you need to place the order.
Right, okay, I understand it now, thank you. So it depends on the use of it, yeah. And that's part of knowing how to separate personal from business, right from the start, yeah.
There is a box when you're checking out that says personal use, and they change taxes based on.
Oh, okay. So just check the business one. No,
It's only for sales tax, not income tax.
Okay.
So it has nothing to do with the IRS.
perfect. Yeah, we'll go 3 more questions, and then after that, we'll have you guys email us and call us.
The reason my accountant asked me to get into the S corporation, said this is going to protect your social security taxes from high when I was working at a regular job. And she said you can declare how much income you want to any tax or social security. Did we cover that at this meeting, or was that just kind of understood?
It's kind of understood. So we can talk about it more after if you'd like to. Yeah.
If we win an incentive trip, how did taxes work on that?
Is it you set your own incentive and then you said, yay, I reached it, or you didn't? Or,
So I'm being sent to Cancun
yeah,
by doTERRA.
yeah.
So I went to Dominican last year on them, but I didn't pay any of that. How does that work? Somebody asked me about that, and I said, you know what, I don't know.
Yeah, they'll 1099 you for that benefit, so it's counted in your income.
doTERRA.
Yeah,
So then we're good.
yes.
What was the question?
So she was sent on an incentive trip and she was wondering how to handle that, but that would have been included in her 1099 at the end of the year. So any additional benefits she got. It's like winning a golf trip, or a trip to go see the Masters, or a trip to the Super Bowl. It sounds awesome and it's great. Or Oprah Winfrey gives you like something on a car on the show, and then later you get a 1099 for $8,000. You're like, oh, I don't have the money to pay the taxes on that. Those 1099s, by the way, for the car they win would have income tax and self-employment tax involved in it. So it's crazy. I'd still take it. One last one. Yeah.
I have people that are lazy and they don't want to bother with the order, so they're wholesalers, so I order for them. And then they pay, but I charge them a wholesale price. How do I deal with the tax on that?
It just ends up being a wash. So you've got you'll have what they paid you and then what you paid out, and it washes out. You still report it. So you report what came in and what went out, but it washes each other out. Okay, awesome. Rod, thanks again. Make sure you talk to Ben. Thank you. Ben or Caleb or myself, or call us. Everybody should have one of our cards. We're happy to talk to you anytime.
Right.